And I have to say, you've been to a lot of these, President. How is this year different? What's your takeaway from this year's confab?
So today is the second day, but I have to say it's a very special meeting. We are living in complicated times, maybe more compared to the years before. Many geopolitical risks, and this is part of the discussions we have in our meetings.
So when you talk about geopolitical risks, often that's code for, will Donald Trump become the U.S. president or will Kamala Harris become the U.S. president? It seems like that's very much a focus under the hood and not so under the hood here at the meetings. How much is that dominating your discussions?
I think now it's 12 days ahead of the U.S. election. What I definitely will not do, I will not speculate who will win this race. But what is also clear that we have to discuss different scenarios, because it comes with an impact. So this is also for sure, especially for Europe. So this is also part of the discussion to think about what could happen, what are the spillovers to global economy. I think these are important questions. These are important questions that are arising from the US election.
How much do you see Germany's economy as being affected? Sort of what are the scenarios for you if one candidate wins over another?
Germany is a large, open economy, so we are very export-oriented. So all this discussion about tariffs that are harmful to Germany, and I believe definitely not helpful for both parties, both sides of the Atlantic. I think we should more or less consider all this and find out what can we do. I think we have to talk to each other, but there would be very severe consequences when tariffs would be introduced in the way they are being discussed.
Do you think that they'd be inflationary for Germany?
Yes, there is a certain probability if that is more or less getting into a direction that the exchange rate is being influenced by the tariffs. Yes, there is a certain risk that this could also have disinflationary effects.
Disinflationary effects?
Yeah, could be. When the euro is depreciating against the US dollar, then the imports are getting more expensive. Also, it could have some, let me say, could push inflation up.
So there's a real question here about the inflation ramifications of this, and we can go into China and how that plays a role too with the overcapacity coming in and whether that would actually lead to potentially lower prices in goods. But right now it seems like certainly the conversations we have on surveillance, people are talking about how why isn't the ECB cutting more, especially when the growth outlook isn't that great. We got PMIs out of the region this morning. You've been actually one of the more cautious among the committee to really cut rates. Why?
I think we showed our commitment. It's not just me. I think, let me mention here, we have a clear mandate, a single mandate. This is price stability. And we were very committed when we fought against inflation. We hiked 10 times. Now we lowered 3 times the inflation rate. We are on track. We are rather confident that we will achieve our target maybe by mid of next year. So this is a success story. We shouldn't forget that. And I have to repeat that we are data dependent on our single mandate. We're achieving price stability.
Okay, but we've had actually inflation come in below the 2% target in the Euro region. We've seen growth really materially slow. Haven't you already achieved the goal?
I think that was a single month. That September month, inflation came out lower than we thought. On that basis, we decided last week to lower interest rates by 25 basis points. But we shouldn't be too hasty. We should be cautious, keep our track to really look what data is coming in. We have in December, when our next meeting is coming, we have our new projection. The new projection will include the year 2027. And then we have maybe more guidance, more orientation. But I'm not in favor to speculate too much what is necessary in our December meeting. This is definitely, I believe, not helpful.
To speculate?
To speculate about what we could do or what we could not do. We'll have all the optionalities. And these optionalities are based on the data that we have in December. And we shouldn't forget, and we started that interview by thinking about what are the uncertainties, geopolitical risks. Then we are behind the US election, so we have then more information, what's going on, and then we can take new decisions.
Okay, so you're saying that actually you are open to a range of potential decisions. You just are trying to be open-minded. So are you open to even an outsized rate cut at some point this year, or do you think that it's important to go in 25 basis point increments?
Again, I will not speculate. because I think this is not helpful. I think we did our job in a way over the past 2.5 years that we gave clear indication that we are thinking from meeting to meeting, data dependent in an uncertain world, and that worked pretty well. And I will more or less stay on that course, and I will react and decide when I have new information.
So there's been a lot of discussion about how the U.S. is the Federal Reserve of the U.S. is a dual mandate central bank, and there's this focus on both inflation as well as employment, as well as the labor economy. Do you feel like your hands are tied because of the single mandate over at the ECB?
I think the euro system, the euro itself, is a success story over the last 25 years. 25 years now. And we are not a political union, we are not a fiscal union, we are not a capital market union, we are not a banking union. Our mandate, our single mandate is crystal clear: price stability. And we achieved price stability over that course of the last 25 years. And so we shouldn't change our strategy in a phase where it is really complicated to do monetary policy.
I guess that some people would argue that for many years the ECB was combating deflation risks. It wasn't inflation risk, it was price stability in the opposite direction. How concerned are you about that?
I think also in the period of deflation, we were very flexible. We changed our ways we are doing monetary policy, QE, we introduced new instruments, but also we showed our capacity to adapt to a new situation. And where did that all came from? We shouldn't forget that. It was the 24th of February 2022 when Russia started this war against Ukraine. And then we changed also our strategy. We hiked 10 times, inflation went up to more than 10%. So it was really a very complicated situation, and we did well. I really have to repeat myself here.
Well, and with this goes to the question of, are those tools still in your toolbox? Could you see a scenario where you could go back into the negative rate policy?
Up till now, I do not see such a scenario. This was really very exceptional, very special circumstances. I see a scenario that we are coming back to our target, to 2%, and then we are ending, I do not know where. So this is also this discussion about the neutral rate. I cannot tell you where the neutral rate are. This is also dependent on the data, and we will see where we end.
When it comes to Germany's economy, it has entered recession, it has declined in terms of growth, contracted. What do you think it will take for it to grow again?
I think, first of all, yes, the German economy could do better, but often I've been very surprised that so many see the German economy so negative. This is not the case. Yes, the last 2 years were complicated. The German government did well to overcome, for example, the energy crisis in 2022. There's a certain probability that there is stagnation this year, maybe slightly negative. But also next year, and the IMF is more or less forecasting that we are going back to a growth path, not a high growth path, 0.8. But this is not as bad as some of us more or less address it when they're commenting on the German economy.
So do you think that it's an inaccurate assessment to talk about the auto manufacturers and
maybe
the sort of structural
maybe it's
challenges?
Not precise enough. I think, yes, there are structural issues. So we have to do our homework. I think we have to do more investments. We have to invest in all the future new developments in AI, digitalization. We have to overcome our demography problem. So there are several things we can do, but we know how we can do it, and we shouldn't forget in the past, taking the experience from the past, the German industry is a very capable one. We shouldn't underestimate the adaptation capacity, maybe strengths of the German economy. So I'm rather positive, and even the IMF today, Gita Gopinath said it, we shouldn't underestimate Germany. There's a good chance that we can more or less there's a good comeback chance.
If Donald Trump gets elected president in the U.S., do you still think that that comeback chance is equal?
As I said from the beginning, I will not speculate who will win the U.S. election.